All right.
Hopefully get something out of it.
Well, let's get right to it then. So we've got 5 slides for you today on this topic of how to set up your U.S. entity. Basically 5 questions. And question number 1 is, when do I need to set up a United States company? Because you don't want to go through all the trouble of doing that if you don't need to. So, Bruce, I've heard about this concept of physical presence, and that might mean that I need to set up a U.S. company. What's that?
So physical presence is actually a term under the Internal Revenue Code about, what the IRS determines of kind of who needs to file. And it's kind of interesting, I love to tell stories. And I remember and it was about 2.5 years ago, the first client that came over from Australia came over here, was forming the U.S. company. And for the life of me, and this was 2.5 years ago, I couldn't figure out why they formed the company. So, of course, I did research and tried to figure out what were they doing. And it turned out that they were actually selling a product into the U.S. that was made in China. They had no salespeople here. It was all drop shipped, so they had no inventory here, and they had no offices. And after a while, I was like, well, why the heck did they form? You know what the answer was? It's kind of interesting. The answer is at the time, they were a Kickstarter campaign. And in order to do Kickstarter and get money to help fund basically the manufacture of the goods that they were making, they needed a U.S. company. So they actually formed because of Kickstarter, which laid off the whole thing, all about the crowdfunding and everything. So anyways, so the idea of physical presence is there's people distributing into the U.S. There's people, forming sales teams in the U.S. where you have a successful business overseas and you want to sell into the U.S. or sell a service into the U.S., sell a product into the U.S., or in many cases, you have a SaaS or software product that you want to sell into the U.S. and you want to basically form a sales organization. And, by doing that, you're going to hire somebody. And, many of our, I'll say, non-U.S. companies, they just want to hire a contractor and let them sell. And we're like, well, wait a second, the IRS isn't going to let you treat your person who's running your business here in the U.S. as not being an employee, because the whole concept of employee versus contractor is foreign, no pun intended, to most of the people coming from overseas. So if you're setting up an office or if you're hiring employees, pretty much you're going to need to form a company. And that kind of gets into this whole physical presence test. And on the owning inventory, what makes it interesting, Blake, about this, is you have companies who are selling and decide, well, we need a fulfillment house. We don't have the ability to pick and ship and do all those things, so we use Amazon. And of course, what comes with that. Amazon, there's been cases of, when you have your inventory in Amazon, it's like you're having inventory here and all the things that go with it. And it becomes a filing nightmare for a lot of people that don't even realize that they're opening that can of worms.
Right, and that's because you own the inventory. Amazon's just holding it for you, and they're doing it in 11 states or 14. It's gotten up to
it's somewhere between 10 and 15. I don't know what the answer is, but it's a lot.
And so that could give you a requirement. You have a physical presence now, not just in the United States, but in multiple jurisdictions, individual states.
Correct.
Yeah.
So the whole idea of physical presence is and one of the things that I think we do pretty well is, we'll talk to people about when they do have Nexus and when they do have physical presence. Because sometimes people think they do and they don't, and sometimes people think they don't and they do. But that's what, people are here to help you with. And hopefully through our guide and through this, you're getting a little bit educated about it, where you can kind of be a little more informed.
So Jason McDonald asked our first question. Thank you, Jason. I appreciate it. He says, what if you start with a third-party agent? So I think, I'm guessing that is being a contractor, right?
Well, that could mean a bunch of different things. I'm thinking when he says third-party agent, meaning maybe he found an agent to help form his corporation, which really has nothing to do with this. I'm not sure.
Jason, you're welcome to clarify in the chat. And he means a distributor.
And we've had that too. So the distributor relationship is a little bit different, and a lot of it depends on that contract and who owns the inventory.
Got it.
So, and then obviously, like we said, everybody's situation is different. But if you're selling them the inventory, probably not. If they are selling your inventory, probably so. And that's a generalized term. But we definitely, it's one of those things about thinking about forming, getting a distributorship versus hiring a kind of a country manager to sell your product and manage your sales and everything. Obviously, that's a business decision.
So this is great. We're getting lots of great questions. I'm seeing some in the chat. So I think we should answer them while we're here.
Sure. We're going to do 5 minutes on each, right?
Yeah, and we're good on the time because we've only got 4 other slides. So we've got one from Rob. Thanks, Rob. He says, what about a non-resident director company, Delaware LLC with no office, inventory, or employees in the United States?
Repeat that for me.
So what about a non-resident director company, Delaware LLC with no office, inventory, or employees in the United States?
We're going to talk about LLCs here in another slide because they're a little bit different in terms of the form of organization. When you say non-director, I'm guessing you mean there's nobody here. There's no inventory.
He clarified. He said it's to operate stockbroker accounts.
Interesting. Stockbroker accounts.
Oh, so you can trade in the United States? Is that what you mean, Rob? Oh, he lives in the USA. Got it.
Yeah.
I'm not sure
I know the answer to that one.
Yeah, we may have to get. He lives in Sydney. So you want to trade stock in the U.S. and the purpose is so you have the LLC to do that. So
that's interesting. So you're a foreign person wanting to trade stocks in the U.S. Yeah, I don't know the answer to that. I haven't heard of that before. The question is going to be: is that income taxable in the U.S. or not, regardless of whether it's in the entity or not? I'm wondering if you got to set up a U.S. bank account.
So this one is maybe a little more detailed. We're prepared for it at the moment. So, well, it actually looks like Laura's talking with Rob right now. So we'll move on to the next question. We'll let them talk about it in the chat. Peter McCarroll said, I have no physical presence, but I have customers. I want to have a proper U.S. bank account to do ACH. Do I need a company for this? So do I need a company for the U.S. account?
So that answer is part of other potential reasons. So let's talk about other potential reasons of why you need a U.S. entity. And these are the things that we hear from our clients and from our prospects. I'm doing business with so-and-so company. They will only pay my U.S. bank account. They won't send funds overseas. So in that situation, if it's a big enough customer and you want to do business with them, you'll get a U.S. bank account. So I'm going to back up what you have to do to get a U.S. bank account. So to have a U.S. bank account, you need to have a federal ID number. To have a federal ID number, you need to have a corporation. So by default, you're going to need a U.S. entity. Now, I will say I have seen where clients overseas have got U.S. dollar bank accounts at foreign banks. So an example of that might be an HSBC where they can set up a U.S. dollar account in Australia. But of course, that would be up to your company because you're only collecting money here. You don't have inventory, you don't have people, so you don't necessarily have the requirement to form a corporation here or file taxes, but you are collecting your U.S. dollars. I don't know if that answered the question or not. Probably raised more questions, but.
All right.
That's why you need some help.
Well, we're happy to follow up to clarify. I know it's tough to ask the question and get all the detail in the chat. So if you want more information afterward, we're happy to do a follow-up. So you can reply to one of those emails about the webinar, then we'll be happy to do it.
So the other potential reasons are basically, number one is because basically the U.S. entities want to pay a U.S. company. And of course, the reason they want to do that is if there's any issue, they want to be able to have recourse. And it's a lot more difficult, obviously, when they're sending the money overseas. And there's no U.S. entity to, for lack of a better term, sue or chase. All
right. I think we should move on so that we can stick to our 30-minute time limit. So the next question is, I've decided that I need to incorporate in the US. What entity type should I choose? Because there's more than one.
Right. So we've seen, most of the companies that come here form a corporation. And, the difference between an LLC and a corporation is really based on the legal statute, has nothing to do with tax. So, corporations are formed under the corporation code, which is basically different by state, which we're going to talk about the where to form here in another slide or two. But LLCs, just from a legal standpoint, tend to be a little more flexible, meaning it's easier to get partners in and out. It's easier to do special allocations. It's easy to do all kinds of funky things. Where in a corporation, it's really almost like it's an entity among itself, where you have a board and resolutions and minutes, and the company is an entity unto itself. Where in an LLC, it's really more like members who decided to do business together. So what we see is many people come over here and form an LLC. We also see many come over here and form a corporation. If you're going to raise money, most of at least the venture capital and angels and everything, they typically will invest in corporations because they understand the law that goes behind them. And it's very clear in terms of, what happens if. Again, in LLCs, it's easier to get in and out, but it's also a lot more complicated when you start raising money. And in many cases, the venture capital and other people will force you to change your corporate structure and convert from an LLC to a corporation. And in doing that, many times there's a tax cost. Some people do it on purpose, and some people do it because they don't know any better. So we've actually had to clean up a lot of situations where people formed LLCs when if they'd have come to us at the beginning, they would have formed a corp. So with that, I want to kind of talk about the tax treatment of this a little bit, because if you're a corporation, you can be taxed two different ways, an S Corp or a C Corp. And what you hear a lot is basically people getting taxed as C Corps because basically the corporation pays the tax itself. In an S Corp, it's considered a flow-through, which means that the income or loss flows through to the owners. One of the issues is S Corps in the U.S. cannot have foreign owners. So it's on the list, but it generally doesn't exist. So you're not going to have an S Corp with a foreign owner. And then in an LLC, although you don't hear about it often, LLCs end up electing to be taxed one of three ways. If it has a sole owner, it could actually be considered a proprietorship, which basically means it's what's considered disregarded for U.S. income tax purposes, which basically means it doesn't file a tax return. The income or loss really just belongs to its owner, and it's effectively treated like a disregarded branch of a foreign company if the owner is foreign, which causes some issues in itself because you could end up becoming a U.S. taxpayer without even realizing, either your company or you. So LLCs generally, if there's a single owner, there's that. If there's multiple owners, you can elect to be taxed either as a partnership or a corporation. So effectively, you can be taxed as a C Corp and get all the benefits of that, but still have an LLC structure. I know I'm talking kind of fast, but at the end of the day, if you have multiple members in an LLC, you can have to be taxed as a partnership, which is just like a partnership, or you have to be taxed as a corporation, which pays the tax itself. In a partnership, the income or loss flows through to the owners, which again could be a foreign entity or a foreign person, which brings up a whole other set of issues. So we like to tell people that from a tax standpoint, unless there's any specific reason to do it, you personally do not want to become a U.S. taxpayer because you don't want to be burdened with all that comes with that. And one of the ways to do that is form C Corp here. And basically, it's its own taxpayer. You would do all the foreign reporting that needs to be done, which there's a bunch, which is like, I think, in presentation number 9 or 10 that we're going to do later in the year. And then basically, you don't have to worry about all that.
And one thing that is not its own slide, but I think is important to address is who you make the owner of the corporation.
Absolutely. Very good question. So we've seen where I'll take two individuals own their Australian entity. They form a U.S. entity and the individuals own the U.S. entity. And then basically it makes money. And before you know it, those Australian individuals are now U.S. taxpayers without realizing what they're doing. So, and there's always reasons to do it different ways. But typically what we see is if you're forming a U.S. company, your foreign entity owns 100% of it. It basically becomes 100% foreign-owned subsidiary. And then we do the reporting according to that. And then, of course, there's certain rules regarding transfer pricing and the cross-border transactions, licensing, management services, et cetera, et cetera.
Got it.
But it is really important to understand there's a difference, thank you, Blake, whether the owners are foreign individuals, foreign trusts, which we're starting to see, especially out of Australia, and then also foreign corporations.
Got it.
Thanks.
So that brings us to the third slide, which the question is, where should I incorporate, right? Because I've decided I have a U.S. filing requirement. I'm going to do a corporation most likely, right? And but the thing a lot of people don't realize, coming from Australia, New Zealand, the UK, wherever, is that you don't incorporate on a federal level here at the country level here. You incorporate with the state, the individual state.
So, as Blake points out, 64% of Fortune 500 companies are Delaware corps because they tend to be corporate friendly. Now, let's equate that to small business. We see many small businesses incorporate in Delaware because, especially when they're going to go do fundraising, because the lawyers and the venture capital and everybody else who's going to invest already understand the investee rules, and it just makes it really easy for them because they don't have to understand what the state law rules are because they already know them. So it's almost like the path of least resistance. I always tell people when you're sitting across from the VC and you're negotiating a deal, the last thing you want to be doing is having to explain to them why you're organized in the state of Nebraska and now they got to get happy with the state law in Nebraska, where if you were just in Delaware, you would be talking about your business. And I think that's a really, and I've seen it happen, not with Nebraska, but however, we do see people form Nevada corporations and Nevada LLCs, and I will tell you, I'm not a lawyer, none of us are attorneys here at HPC, but many of the states now have adopted statutes corporately and LLC statutes that are very similar to Delaware. So it used to be you had different rules, but now the rules are kind of the same, but let's just say the rules are better tested and have been through the courts in Delaware. So you're going to find Delaware. It's pretty easy to do. You do need a registered agent, which we're going to talk about, but it's easy, it's relatively quick, and it's inexpensive, and there's a lot of people that do it. So it's like, why do something different if you don't need to? And I think the important thing on this slide is where you do business and where your people are and where your inventory is has nothing to do with where you form. They're two different things.
Got it.
Perfect. Okay.
All right, moving right along. 4 of 5. The question is, well, let's analyze how we got here. We've decided we have a U.S. filing. We need a U.S. entity. We want to form a corporation. We want to do it in Delaware. How do we do it? Right? And this is the hard part.
Yep. So I'm going to give you some options here, and I'm going to do the most conservative to the most aggressive. So in the U.S., one of the things, because it's so litigious here, the attorneys have a really good lobby, and pretty much you need to use them for everything. And they also basically don't like other people treading on their territory. So I know some of my friends in Australia can actually form corporations and do some of that, where we're really not allowed to give legal advice in the U.S., and we don't give legal advice. With that said, you don't necessarily always need an attorney to do all of the basic things of getting set up. You do need them for advice, and this gets back to that whole situation of we want to pay for value. You don't want to pay, 3 times the price, but you can get something done for less where there's really no value. It's just a task. So our recommendations are that basically it is okay to get your corporation formed, basic corporation formed in a different way. However, if you're going to need to start raising money or have to negotiate a shareholders agreement and that kind of stuff, you definitely need to use an attorney. But it doesn't mean you can't form your company, then hire an attorney. And I think that's a little bit different probably than what most people say. So there are incorporation services out there like LegalZooms of the world that do a lot of that stuff at much less of a cost than hiring an attorney. I've had people come to me from overseas who've spent $5,000-$10,000 just getting a corporation formed with no advice. To me, that's crazy.
Wow, that's a lot.
Many times they're in New York and San Francisco in the city, which is the other thing is now in a global environment, a global business, you don't need to have an attorney. We all have access to pretty much everything in all the states. And then, of course, there's the do-it-yourself. You can go on the Delaware website and form your own corporation, and they'll give you a draft of the articles of incorporation and the bylaws and do all that, and you can do your thing. And that's okay to do. And it's actually probably easier to do in Delaware. We had a situation once where somebody did it in New York. Remember, every state is different. New York happened to have a rule that you have to advertise your corporation in a newspaper. And if you don't do it, your corporation is not validly formed. What do you think about that?
So did their corporation end up not being valid and they had to start over?
We caught it and we did the
advertisement. Yeah.
But here's the thing that an attorney would know. Attorney forming corporations in New York would know that. You don't know that. In any event, that's an example of kind of what can happen when you do it yourself. As you know, Blake, because of this, we actually now are helping clients that come to us that are not formed actually get their corporation formed for a pretty low fee for the low stuff. We're not giving legal advice. We're not doing that, but we'll help you get your Delaware company formed with the basics. Because I think it's crazy to spend that kind of money to get your company set up. Just to get an ID number and open a bank.
Right. Well, that's great. All right, so those are the three options you've got. Let's move on to our last question. And I know this one's going to be a little overwhelming, but we thought it was important to show you everything that is involved. So This is, what else do I need to do to get set up? So this is a list. It's not comprehensive, but it's most of the things you need to do.
So when you form your corporation, many of the states require that you have a registered agent locally. So for example, in Delaware, and the reason they do this is if you get sued, they want to know that they can serve somebody in the state. So I don't know if I ever told you this, Blake, but back when I started being a CPA, I was actually registered agent for some of my friends' companies in Georgia. So when they got sued, I'm the one that got served. So I've had the sheriff at my old office several times for one of my insurance clients that got sued a bunch of times. And that's exactly the purpose of a registered agent. So they can serve somebody and the sheriff can show up.
I'm sure that was a bit uncomfortable when you called
your friend. It wasn't me. So, but,
probably gave you a heart attack.
After that happened the first couple of times, I got used to it. But the point is that many of the services that you use will provide registered agent services. And it's important that you can't get formed without it. So you're going to have a registered agent. There's services to do it, blah, blah, blah. Every state's different, again.
And some of these incorporation services most of them will provide the registered agent service.
And they'll have an annual fee for that.
Right.
And I think in the state of Florida, even you actually have to have a physical address or a resident or somebody there too, which is, like I said, every state is different.
Got it.
So a couple of things that you do, like when you go on the state of Delaware website, or you use, or even what we do with the service, we'll provide you with a certificate of incorporation. We'll provide you with a certificate of good standing. We'll provide you with some bylaws. But, we're not going to do the board of directors minutes and showers agreements. Those are the things that you really need an attorney to do.
Those are the things you can't just take a template and sign it. You have to customize it.
You should not take a template and sign it. You should not do that. But some of the other things, what do you really need? You need you need the certificate of incorporation, the good standing to, sometimes to get an ID number or registration in a state to do business as a foreign corporation. So you got to have them. You register, you get your ID number, then you can go to your bank and open your bank account. So it's all just very task-oriented of what you need to get to the next step versus advice, which you need an attorney for.
Got it.
And then once you are formed, different states have different requirements. Delaware has an annual franchise tax return that has to be filed that you can do on your own. You can do through a service. We do them for our clients. Same thing.
You just really want to make sure you don't forget to do that, because then that creates standing problems.
It does, and there's penalties and all that kind of stuff. And effectively, your corporation could end up not being in good standing. Then when you go try to do something, it could cause you a problem. They send a lot of notices to get get money. Trust me, it's hard to miss it. Well,
it's funny because every state is different, right? So, being here in California, I'm used to the state of California doing a really terrible job of getting money. And so, like, you get one postcard from the state saying it's time to pay your annual tax, LLC tax, and that's it. And if you miss the postcard and you don't pay that, it's quite a hefty fee.
You get emails out the yang from Delaware, or at least the person who's responsible or the person whose name is on it. And one of the reasons why we take care of it for our clients is we get notified, we do it, it's done.
And I think that's one of the things that's great about Delaware is the fact that they're very, well, not very, but more tech savvy, I would say, than other states. Right?
And they're set up to do this. They have a lot of companies that are not, many companies are not there at all. They just form there. So they're kind of set up to do that.
Got it.
So I think the last thing to do is here, we're talking about once you get your corporate stuff, you apply for your federal ID number, which again is interesting. We have a whole session on that about when you don't have a social security number or when you're not here. And then of course, where you're going to operate, where you're going to hire your first person. We have a section on that. And getting registered to do business as a foreign corporation, meaning not registered in that state, not foreign, meaning overseas.
Yep.
So, but all these things have to be done. We're here to kind of make sure that everything does get done, and obviously help clients to get it done.
So good news. We hit 5:30 right on the mark. So the official part of the presentation is done.
Nice.
I don't have any current questions that are open, but if you have a burning question and you haven't, put it down, please do so in the next few seconds. If not, I'm going to go ahead and just close out the webinar. So going once, going twice. All right. Thank you all so much for coming. I really want to let you know before we go that we have a guide that we have put together, a very detailed guide on our website, hpccpa.com. If you go to the resources tab, you'll see there's a guide to doing business in the United States. It has a lot of this content in there.
Really a lot of links if you want to get educated on your own.
Yeah. So that's a free resource to you.
Yep.
You can connect with us on Twitter. HPCCPA is our Twitter username. Bruce, he is Bruce_HPC. I'm Blake T. Oliver. And please do feel free to reach out to us via email or on Twitter or LinkedIn if there's questions you have that we couldn't address on the webinar. We really appreciate you taking the time.
Thank you, Blake. Great job. Appreciate it. Always good. Enjoy doing these. And thanks everybody for coming. And
we look forward to seeing you on the next webinar.
Have a good night. It's nighttime for me. Morning for many of you.
Good night and good morning.
And good night.
Bye.